Hi, my name is Bob Seng. I'm a member of the Employee Benefits Department with Dorsey and Whitney.
And I'm Tim Goodman, also a member of the Employee Benefits Department.
Actually, I think we call ourselves Benefits and Compensation, but I'm having a hard time getting used to that. All right, Tim and I today are going to talk about ACA reporting and EINs. Before we get into the discussion, let's review a few terms. Now, if these terms seem like alphabet soup to you, and if you're confused, a couple very good resources. The instructions to Forms 1094 and 1095C have a definitions section that's really quite good. And then Liz Deckman and I did a screencast on sort of ACA terminology that's on our blog that you can look to as well. A couple terms important for today's ACA EIN discussion are aggregated ALE group. So those of you in companies with various corporate entities within the company are aggregated ALE groups. And for purposes of this discussion, we're going to assume that anyone listening to this screencast is well over the 50 employee limit to subject an employer to ACA. So the collection of companies within your group would be referred to as an aggregated ALE group. And then each member with its own EIN in your group is an ALE member. Okay? Now, for today's example, as I've mentioned, we have a single aggregated ALE group. Think of that as the big white circle on the slide. And then individual ALE members, each with its own EIN and each with its own set of employees. Tim, anything to add before we sort of talk about the three things that flow from this?
No, I think that the important thing to know is that with each having its own EIN, you can have someone else report on your behalf, but you still have to use the EIN for that entity. You can't just use somebody else's EIN.
Good, thank you. Okay, so three things to remember in a configuration like this. And maybe, Tim, I will just sort of hit the arrow and you can just touch on them for us.
Okay. So each ALE member distributes W-2s with its own EINs to its employees.
Okay, so in the example here, there's going to be at the end of the year, there's going to be 3 different batches of W-2s. Is that right?
That's right.
That's
right.
Okay. Could these people all be in the same 401k plan?
Absolutely.
Okay.
Absolutely.
And then the next point would be?
Well, each ALE member files its own 1094C with its own EIN with the IRS.
So you're meaning to tell me that my group of companies here that has one 401k plan and one health plan is going to have to file 3 separate 1094s?
That's right, and that's so that the IRS can go ahead and assess the employer responsibility fee appropriately for each of the employers.
Help me out. Employer responsibility fee? What do you mean there?
That's the big fee in terms of the employer shared responsibility fee. If you don't cover a sufficient number of your employees, your full-time employees, or if you do cover your full-time employees but it's not affordable or you miss someone, you might end up with a fee, and that's how the IRS will be determining who owes that fee.
So in my picture here, that fee doesn't apply to the big white circle. It gets done individually to each of those 3 little pockets?
That's correct.
Okay, good, thanks. So then there's a third piece here that attaches, and that is?
Well, each ALE member has to distribute 1095Cs to each of its employees, and for that matter, if it's a self-insured plan, anyone else who has coverage with its own EIN.
Okay, good. So I think of the 1095Cs as sort of like a W-2. Not quite, but sort of.
Yeah,
fair?
That's a fair analogy.
Okay, good. So let's review and summarize for just a moment here. Maybe I will take the review since Tim walked us through the details. So in most cases, each ALE member in an aggregated ALE group uses its own EIN on the W-2s that it issues, on the 1094C that it files with the IRS that is sort of like the cover sheet for its health plan, and then on the 1095Cs that ALE member issues to its employees. So Tim, that's always how this works, right?
Well, almost. You have to wait here, and there's some other specialized payroll rules that come into play sometimes.
Okay, and those are?
Well, that happens under a couple of things. There's one set of rules known as the common pay agent rules under Section 3504 of the Code, where if employer and the pay agent file forms with the IRS, then the pay agent can take over the withholding and reporting of different income and employment taxes.
So that might be sort of if I've like outsourced a lot of my payroll work. That's where it could show up.
Yep.
Okay. Is there another exception to this rule?
Yep, there's at least one more exception. That's when you have something known as a common paymaster situation. And what you can think of here is, let's say that you have an employer that has a couple of different facilities, and maybe you have an employee working at both of your facilities working for two different EINs. For example, let's say you're a healthcare system and you have an employee who works at your hospital but also at a clinic part-time. So they might be working at the hospital 32 hours a week and at the clinic 8 hours a week. To simplify things so that you don't have to issue two W-2s to that person, if you meet the requirements, you can use the common paymaster rule and issue just one W-2 to that person.
Okay, good. So these are instances where the ALE member's EIN would be used for ACA reporting, but not for the employee's W-2.
That's correct.
Okay.
You're going to get in with the mismatch in essence. The W-2 will have one EIN and the ACA reporting would have a different EIN.
Good. Thanks. Okay, so we are almost done, and review is always useful when talking about topics like this, and we're going to review one more time. In most cases, when you have an aggregated ALE group with separate ALE members, there are a few things to consider. And before I go to this review, let me just say for a moment, I think that one thing employers or employee benefits specialists are well served to do as we move into ACA reporting is figure out where their employees are paid.
Yes.
Is that fair, Tim?
Yes, absolutely.
Okay, good. So again, three concepts to remember here. In most cases, an ALE member with its own employees and its own EIN uses that EIN on the W-2s that are issued to its employees, on the 1094-C that it files with the IRS, and then on the 1095-Cs that it issues to its employees. And the exceptions, Tim, again?
The exceptions are the common paymaster exception and the common pay agent exception.
Okay, good. That's it for this screencast. Please give us a call if you have any questions, and thanks for listening.